Hello everyone, I'm Shane Vernier and welcome to Switch Markets Live. Today we're going to be doing our price action workshop. I'm going to walk through 3 strategies that are based solely on price action. Plus we're going to do a trade review of a trade idea that we put out yesterday over at howtotrade.com that's faring pretty well, pretty much already hit our profit target there. And we also want to talk a little bit about Pine Connector. Now, Pine Connector is an interesting technology. It's really coming into development. It's going to be able to help you trade using TradingView and MT5, and I'm going to show you exactly how you can integrate Pine Connector into your trading. I think that it's one of the bigger, more exciting breakthroughs that I've seen in a while. It seems like no matter how hard you try to get on top of all the tech right now and all the AI, you can never stay on the lead lap. So I want to welcome everybody back. We've got a lot to cover today. If you have any questions at all, be sure to ask them in the YouTube live chat. T. Marina, good to see you, T. If you have any questions at all, be sure to ask. I'll do my best to answer. There's only a couple of rules on my streams. Number 1, if it makes money, it is the right answer. Number 2, if I don't know the answer to your question, I'm not going to sit here and lie to you and say that I do. We don't do that here. And another thing, probably an informal third rule. Easy is always better. Simple is always better. I'm going to do my best to present these ideas in the simplest format that I can, but sometimes we just got to, we got to put in some effort on our end and make sure that we're up to speed on some basic concepts before we dive into the markets. Remember, if you ever have any questions at all, you ask them in the live chat, or you can head on over to howtotrade.com and send me a private message. Click on my picture at the top of the screen and go ahead and send me a PM. I will apologize ahead of time. I am a bit raspy. A lot of pollen in the air here. I'm up in Dillon, Montana, way up north here in the United States. A lot of pollen in the air. It's sort of tough to breathe right now, but I'm going to do my best to sort of muscle through this stream. But I feel good. Mentally, I feel good. Trading, I feel good. These markets are on fire. Really a great day yesterday to trade. Today, a little bit slower on the U.S. Open, but we're going to cover a few ways that you can trade it a little bit later on. 44, The Punisher. Good to see you. 44, welcome. The Punisher. That was a great movie. It's an old one, but I like The Punisher. I like this style. Good to see you. Good to see you too, 44. All right, guys, remember, I'm running like 3 or 4 different live chats, so if I do miss you in the How to Trade trading room, don't be offended. We're over here on the Switch Markets YouTube channel right now, so if you want to comment, be sure to weigh in right over here. Okay, guys, let's go ahead and get started. Today is going to be our price action workshop. I want to start off with a trade idea, though, a trade follow-up. What this trade was it basically was just a pullback bid in the Euro USD. Now, this is an idea from our analytics thread, our actionable trade idea series that we put out over at howtotrade.com, and we think that potentially this is going to be a pretty good trade. And this is one of those where we were basically looking to buy a pullback, believing that the Euro USD was going to continue trending north, and we were using a Fibonacci retracement sequence to do just that. Now, Fibonacci retracements aren't necessarily a price action strategy, so we're not going to cover them today, but they are my bread and butter. I call it the Fibonacci counterpunch, and I'm looking at fractals. I'm looking at converging indicators, and right now, we hit this one out of the park. This was a pretty good trade. You can see right here, 4-hour Euro USD chart, really off of our downside support line right around 113.60. We've rallied up to right around 114.16, and I believe our take profit was 114.19, and it looks like we're going to hit it right now. So that was a nice 50 pip trade. It's one of those trades that you really like to see come to fruition, especially ahead of tomorrow's ECB report. Now, we've got ECB tomorrow. They're expected to cut interest rates. You've also got Friday, you've got US NFP. So those are 2 key market moving events that are going to have the Euro USD on fire. Very, very important that you understand what's going to move and when it's going to move. The Euro USD is going to be all over the map today. I'm really happy that this trade came off the board and hit its profit target before we got into sort of the deep grass. I call it the thick, tall grass that the ECB is going to bring. So I'm very, very happy with the way that trade panned out. They're not all winners, but boy, we went through January and we didn't lose. And I got to tell you guys something. Every time we win, I smile. That's for sure. I love to win. That's a little bit about my personality. I love to win. I don't like to lose. However, as a trader, losing is part of the deal. You're going to have to lose, and you're going to have to manage drawdowns. And a lot of you struggle doing that. You go on tilt, you lose a lot more money than you should lose on a losing trade. That's okay. We can fix that. It's all fixable, and one of the biggest ways you can fix that is by having a sound strategy and understanding what you're going to do from a trade management perspective. All right, I just threw a lot of concepts at you. Let's go back to square one, and let's make this real easy. We're going to start with a price action strategy that's going to be in intraday trendline reversal pattern trading. Now, this is a trade that I've been watching very closely, and unfortunately, it's already gone. I'm going to go ahead and show you the trade, and I wanted to execute this for you live, but it's already gone. This is a 4-hour chart. This is the Euro-Yen 4-hour chart. Now, you can see right here, the tail end of this, and this is our MT5 platform powered by Switch. You can see right here, we had about 3 or 4 touches on our trend line. Now, to me, a trend line basically is 2 points. It only has to be 2 price points. You connect the 2 price points. You develop basically a 45-degree angle or a 45-degree line, an angular line. That's a trend line. 2 touch points. The third touch point really is key. Now, what the third touch point tells us, it tells us that that's either going to hold up a support or resistance, or it's going to be a breakout point and potentially send the market much, much lower. This is a textbook intraday trendline reversal pattern. Now, what this pattern essentially is you've got a nice uptrend right here. Now, I used a 4-hour chart. A lot of chartists are going to disagree with what I did right here. I like it. I like it. So you got 1, 2, 3, 4, bang. There's your break. As soon as that trend line broke, you're off to the races south. That is the reversal. Now, remember, all these strategies, you can find them over the videos. The full videos and tutorials are over at How to Trade Calm on YouTube. Be sure to check those out. I'll probably link the video links beneath this live stream once we're done here on Switch. So be sure to check these out if you want to learn more about these price action strategies. Remember, a price action strategy is something that does not use indicators. We are just basing our decisions on price. That's it. That's it, and that's all. So for an intraday reversal trend line, an intraday trend line reversal, it's very simple. You got a couple of touch points, and then you get the break. Now, great question right there from T Marina. Why only 2? Well, I like to start with 2. I believe that a trend line essentially is 2 points. It's either you're connecting a couple of pullbacks, a couple of troughs, or you're connecting a couple of peaks. Now, for me, a trend line, when you draw them, very simple. If you're looking for sort of a downside support zone measuring an uptrend, I draw it from the lows because I want to get in on the reversal. Now, the other side of that would be if you want to go ahead and draw, look to play a bullish reversal, you're going to go ahead and connect the highs in a downtrend. The idea is to get in on a trade when it's over. That's it. We want to get in on a trade when it's over. So, when the trend is over. That's what our reversal is. So for me, 2 touch points is plenty. That gives me a good idea of price action and really the market's direction. Now, the key is they have to be obvious. We're not going to get in here into these this range right here and start trying to draw trend lines. It is worthless. It will not help you. What you've got to do is you've got to have a directional move in price. See this nice big break? Theoretically, you could have drawn the uptrend right through here if you wanted to. For me, I'm using a 4-hour chart. I want to look at probably the last 16 hours of price action. That's a pretty darn good sample size. That gives us an opportunity to trade this thing to the south. So when we're looking at a trend line and we're thinking in our heads, okay, what does it mean? All it is it's just showing you price direction. Now, here's the kicker. If you only have 2 price points, what about all the other touches? Each one of those touches gives validity. And if you check out the reversal pattern video, which not many people have, it's all about the third touch. What happens on the third touch? Well, right here, we've got 1, 2, essentially. Boom, boom, boom. Okay. If we don't count the middle one, which you don't have to, it doesn't quite go down to the trend line, but you can count that one as well. Right here, either that one's the third or that one's the third. Initially, you hit the trend line and you bounce up. But after all these tests of that trend line, we know once it breaks, the trend is over. The more touches your trend line has, the greater chance it has of setting up as it being a big-time reversal. So in a perfect world, you draw a trend line and just watch this thing sort of go into perpetuity 9 or 10 or 15 times, and you know eventually when that trend line breaks, it's off to the races. That's a pure price action strategy. There's no indicators involved. A trend line is not an indicator. It's not. It's just a way that we connect lows or highs. So don't ever get confused by this stuff. Trend lines are easy. The problem that a lot of people have with trend lines is the problem they have with all indicators. They use them where they're not warranted. You don't need to be drawing trend lines down in here. Or, up in here is pretty good. You could even do a macro trend line right in there that would have given us an opportunity. Let me see if I can draw one of these things. I'm using MT5 here. Yeah, it's sort of clunky. You got to really drag and drop. But in any case, something like that wouldn't have been bad either. You could have said, hey, well, whatever. In any case, right there, you could have connected that to that, and then there would have been your reversal. Trend lines are powerful. Trend line reversals can make you a lot of money. You just have to be smart about how you do it. That's all. So let me see. Can we retest for more confirmation? Absolutely, Team Marina. That's what it's all about. The more tests you have of your trend line, the more confirmation you have that, okay, something's there. Think about it. In an uptrend, the more times we test, that means the bidders answered the bell. They answered the bell. They answered the bell. And what we want to do is we want to sell when all the bidders are gone. And once the bidders are gone, that clears the path for us to sweep in and grab our money, take our profitability, take our cash off the board. And that's exactly what we want to do. We want to get in when the trend's exhausted, hence the reversal trading mentality. Now, reversal trading, a couple of things that I'll say about reversal trading before we go any further, can be problematic. Remember, you are fighting trends, and that sort of lowers your expectations, lowers your probability for success. However, they can be lethal, meaning you can get in on big moves. Absolutely big moves. And when you get in on the big moves, they can be very, very lucrative. So I would be interested in trend lines. Trend lines are a big deal. You don't ignore them. Don't ignore them. Now, it's going to take you a little bit of time to get good drawing them, but that's okay. We have time. Within 2 weeks, you guys can draw trend lines. You can learn to draw trend lines. Just keep it simple. Remember, we're looking for peaks. We're looking for valleys. We want everything clearly defined. If we see it and it's obvious and we can perceive it immediately on the chart, that means that we're probably right. If we have to think about, is it a trend, isn't it a trend, you're in big trouble. You're in big trouble. So I definitely want to go ahead and do that. All right, we had another strategy that I know a lot of the veterans of these live streams we've done a lot of orb trades lately over at howtotrade.com. This is one of the bigger videos, one of the more popular videos that we've made. I really like the orb, and right now is a great time to really go over an orb trade. I was watching the US 30, and once again, this thing just sort of broke on us. But it looks to me like we had a news event of some sort here in about the last 15 minutes. I don't know what that would have been. I would have had to look at my economic calendar. But the orb is an opening range breakout strategy. I keep this as simple as I possibly can. 2 bars, 2-bar orb. Which time frames? For right now, we're looking at the U.S. Open. I'm looking at the U.S. equities indices. Right now is the time to be looking at trading an orb. 15-minute chart works well. 30-minute chart's my favorite. We're going to look at a 15-minute orb. Now, all an opening range breakout is you establish a range, a trading range right after a market's open. That's it. The best one, realistically, the best one to catch consistent moves on is going to be your U.S. session right after the U.S. Open, which is at 9:30 a.m. Eastern every day. That's going to be the best time to target an orb. Now, you can also do it on Forex. We're going to save that for another stream. I made a video on Forex orbs. Typically, those are a bit more challenging to line up, but they can still be pretty good, especially that 4-hour orb right after the the weekly electronic open. That could be absolutely fantastic. So right now, I'm looking at a 15-minute orb that is interesting. It's interesting. It's sort of disjointed, and it got messed up, but that's okay. That's just the way that it is. You see right here, you have back-to-back 15-minute bars on your US 30. Now, right there, opening bell, ding, ding. There's your opening bell, first 15 minutes. There's your second 15 minutes. To execute an orb trade, very simple. Very, very simple. 15 and 15. You're looking to sell on the first bar that closes outside of the orb. So if you close above the orb, you're going to buy the market. And if you close beneath the orb, you're going to sell the market. The idea is to get in on a breakout. Now, here's where the real mastery comes in. That's not a hard concept to understand. That's simple. Here's where the mastery comes in, though, and where you're going to need to be savvy. You're going to have to understand where the market could potentially go. And right here, you can see you've got sort of some lows. You got some lows setting up there overnight, what I call the overnight lows. That would have developed probably during the European or Asian session. Okay, that would have been one set of key levels that we needed to be aware of going into our orb trade. The other one would have been, say, the previous day's low. Previous day's low for this bearish move. So maybe something down in there. One last thing I'll say, and another way that you can do it that we didn't cover in the video, a lot of you guys really love smart money concepts. I'm not a big fan, but you could just look at order blocks. You could say, okay, we had a cluster of action here. It looks like we had a liquidity sweep. We had a rally, then we knocked out all the longs, and then the market rallied. Okay, so theoretically, there's something important about this zone here. If there is, it could potentially be a magnet. It could potentially be a magnet. So absolutely 44, you're welcome. So that's a potential profit target. Now, remember, every trade, no matter what strategy we're talking about, has 3 parts. You've got an entry, you've got a stop loss, and a take profit. That's it. Where's my stop loss going to be? You have two options. Number one, you put it above the orb in this case. If we close beneath this orb, then we'll be looking to sell. So in 36 seconds, we're going to go ahead and line this trade up. And if, in fact, we close, we're going to go ahead and sell. You can see it's disjointed, though. Something's definitely up in the markets. I'm sorry, I don't have a live news feed in front of me. It looks like something definitely broke. Just let me take a look real quick. I'm not seeing it. I just saw that we gapped down for some reason here in the US 30. All right. In any case, this is a pretty darn good orb trade. And the reason why is we're going to close outside of that, and we're going to go ahead and sell the market. Okay, there it is. Bam. We're going to go ahead and sell. So we're going to be officially short this market. Now, this is a very, very, very unique type of a trade setup. You had a really tight open, tight second bar. Just beautiful, beautiful. That's a beautiful orb, guys. Running dojis, long-legged doji, and an inside bar doji. That's a great trade. Now, the problem that I have with this is we opened way down here for some reason. There was something was major league disjointed. So I don't really know what's happening right now. We're rotating back up into the orb. Probably wouldn't have taken this one, but it's still a legitimate orb trade. So for right this minute, where can we look to put our profit target and our stop loss? For me, 15-minute orb, very tight. I'm going to put my stop loss right above it myself, right up there about 42,651. So I'm going to be right up there about 42,655 in this US 30. Now, the market's rallying. It's rallying right back up into our body. It looks like we could be in trouble here. Where's my profit target going to be? At least a 1-to-1 risk versus reward. At least. Probably like to live with like a 1-to-2, 1-to-3. Because we are playing breakouts. And right now the market hasn't moved at all, so we're waiting for a move. We just hope it's not a reversal. This could be a reversal. Very ugly chart. And it looks to me like we're going to get hit right here. In any case, if we did take this sell, where has my profit target have to be? I would put it down in here somewhere, potentially. 42.81. Do we think we're coming off about 280 points? Maybe, maybe not. How about a 1-to-1? 42.657 from where? 42.552. Maybe we're just looking at about 100 points, something like that. That's like a 1.5 to 1, somewhere in that neighborhood. So we have a chance there maybe to make a little bit of money, although this one's not going well. You can see exactly what's happening here. And these are demo dollars, guys. Remember, we're doing this for instructional purposes. I'm not telling you how to trade, what to trade, or when to trade. That would be a big-time no-no. But this would be how you execute an orb trade. Now, to be honest with you, that chart setup scares me. Doji's beautiful. If we would have got just a negative candle and a close down here, I would feel a lot better about this. But something happened. We opened way down, and now we're reversing back up into the range. It looks to me like everybody got their stops run beneath the overnight low, and the bidders are now fully in control. In any case, we have a structured trade. We have an out. We have a stop loss, and we also have a profit target. We have an entry point. We're just going to go ahead and let this orb roll and see exactly what happens. Now, there's a second way that you can put your stop losses here that a lot of people really love with this opening range breakout strategy. They love to put it right above the trigger bar. A word to the wise. If you're trading something as tight as a 15-minute chart for an orb, you probably need to give it a little bit more room. Otherwise, you're going to get stopped out a lot, and the market's not necessarily going to be your friend. It could easily stop you out inside of our orb and then reverse and move down. But right now, this is an interesting trade. We're going to go ahead and we're going to leave our stop loss above the orb. I don't particularly like the market structure. I don't feel real good about it at all. It feels like what I call a dead fish. And there's an old saying, never sell a dead market. Well, we just sold a dead market, but we did have a reason to, and that would have been our orb strategy. Is it a close orb? Yeah, it's not the best one, but we're going to let it run and see exactly what happens. So good to see you. Let me see a bit. 44, the Punisher. Yeah, it's a big gap because of the news. Yeah, we have a news bar here. You can see you got the big flurry right there. You got a big flurry of volume, and it really does sort of negate the action that we wanted. We wanted to see true trade, what I call true action, true price action, unfettered price action right in here, and then get like a close so then we could play that breakout beneath the overnight low and maybe put ourselves in position to kick a little tail going in later in the market. I don't like the way that panned out, but we're going to, hey, listen, it's a pretty good example of an orb. Buy the ticket, take the ride. As soon as we put the orders down, that's the way it is. Now, one thing that I want to say, we're going to let this one roll for a minute. One thing that I want to say before we go any further. You'll notice that I'm using TradingView. The reason why that I use TradingView on these live streams is because I know it like the back of my hand, and I'm very good at manipulating it. I can do it fast. We can do anything we need to do fast. MT5 for me is a little clunkier. I'm working on it. I'm getting better at it. Just for me, I use TradingView for my analytics, and then I would use a different broker for my actual trade execution. Now, SwitchMarkets offers you MT5. MT5 is a pretty good platform. I'm getting up to speed on it more and more every day. I'm just not quite there. This type of integration, if you are a TradingView trader, if you like TradingView, this technology right here can set you up. I mean, this can take care of you. And what this is this is Pine Connector at pineconnector.com. Now, the SwitchMarkets is going to be, or if we're not already, we are going to be integrating Pine Connector into our service suite. And what that's going to allow you to do, it's going to allow you to trade with TradingView and then just have your trade executions run through in your systems and your alerts and everything run through MT5. And it's just, essentially, it's just an API. It's a bridge. So essentially what Pine Connector does is it links up TradingView to your SwitchMarkets MT5 and makes your trading experience that much streamlined. If you're a TradingView trader like me, then you would get something like this, and this would be how you traded. You'd link up your TradingView to your MT5, and you can see you've got all sorts. You can go automated trading strategies, but you can also trade manually. Now, I'm a manual trader. I put in my orders, and listen, I've got all sorts of different automated ATM strategies and things where I don't have to be in front of the computer when they go. But typically, I'm a manual trader. And the reason why is because I like to be there and I like to manage the positions in real time. And when you've been doing this for 14 years now, you can do that. You can get away with that. I don't recommend that for a newbie. I think you need to set your trades up and just let them play out. Because if you get into too deep into the trade management on the fly, you can really run into trouble. But this Pine Connector will allow you to take your automated trading strategies from TradingView and your manual trading strategies, and it links you immediately to your MetaTrader 4 and MetaTrader 5. You see all the service suites open. Switch is a part of that. If we're not a part of that yet, we're going to be a part of it very, very soon. So this Pine Connector is an interesting type of a service. Definitely keep an eye on this integration when it does come our way. I think that it could be a big-time bonus for you that are trading TradingView, that just want to be able to trade on TradingView and have your trades executed through Switch on MetaTrader 4.5. We believe that this Pine Connector is going to be an absolutely fantastic way for you guys to get the job done using your favorite platform. If that's TradingView, great. If it's not TradingView, well, that's okay too. If you like MT4, MT5, more power to you. I know a lot of traders. We have a lot of veteran traders over at How to Trade, and they know MT4 and MT5 like the back of their hand, and they love trading with it. For me personally, I've been trading futures on TradingView for a long time now, and I know the platform, and I would much rather just use this bridge that would give me my trade execution right through MetaTrader 4.5. So this could really be nice. Finally, we have webhooks. Yeah, we have an opportunity here to definitely get something done, Team Arena, with TradingView through Switch's fully functional platform. I'm excited about it. I like TradingView. It's going to let me keep streaming on TradingView, so I like that. I think that's a pretty good thing. All right, guys, the last strategy that we're going to cover today. Now, remember, pure price action strategies are, excuse me, this pollen's tough up here. You'll have to excuse me. The pure price action strategies are definitely something that I encourage everybody to do. Let me see. I just got to check into the How to Trade trading room. Dragon. Shane having fun with the counterpunch. Looks very promising. Absolutely, Dragon. I hear you. So this is one of these things that I got to tell you guys. Nobody's watched this video. I mean, I think it's got like 500 views or 100, I don't know. It's not very many, and that's cool. That's cool with me. Hey, listen, I don't need to have 1.5 million views to go home and think I did a good job. I know key levels like the back of my hand. And I use Fibonacci's and I use all the different moving averages and things along with key levels to understand how to trade. That's what trading's all about. At some point, okay, we've got EMA crossovers, we've got orbs, we've got all this different stuff, but you have to understand how to be a trader. You've got to be a trader. If you're not a trader, then what's the point? So when I look at something like a key levels in trading, I'm saying, okay, what could that possibly mean? This goes back to the pit days. Now, I use some trend line examples in there, and that's all great, but I'm going to show you big round numbers today and how important big round numbers and key levels can be. Now, I don't have the article in front of me. I was featured, I believe it was last year, I was featured in Business Insider, and I talked a lot about breakouts for gold. And I said, hey, listen, You need to know your key levels in the gold market. If you don't, you're going to get cooked. You're going to get cooked. And right now I have a set of key levels that I'm going to go through in gold that we all need to be aware of. And if we're not aware of it, you're liable to really lose a lot of money. I personally, the way that this market dynamic is shaping up, I am more excited for the gold market than I've been in a long, long, long time. I can see what's developing. I can see a potential breakout brewing like we haven't seen in a long time. We've got fundamental market drivers that can drive gold higher. But more importantly, I've got the key levels to work with. The key levels make the markets. Now, back in the old days, back in the pit, just real quick before we get to this lesson here, back in the pit days where everybody was in the open outcry pit, it was all about key levels. Are you buying a quarter? I'm buying a quarter, bid a quarter, bid a quarter, bid a quarter, selling half, selling half, selling halves. Everything was 25 cents. So you're bidding quarters, you're selling halves. You understand exactly where the big round numbers are. You say, oh, Goldman's sitting there, $100 crude oil. I know Goldman's sitting at 95 or 97.50. What am I going to do? Am I going to go short here? I know they've got my back. I know JP Morgan's over here. We're watching the upstairs traders. Everybody's getting involved, trying to figure out where the top and or bottom is of the day's range. That's trading. That's what's been lost in the computer era. As you can see, I wanted to be a pit trader so bad I could taste it. After my baseball career was over, I wanted to be a pit trader more than anything in the world. And by the time I got around to I came of age, I said, okay, I got my degree. I'm done playing baseball. I want to go to the pits. I want to go to the Chicago Mercantile Exchange, or I want to go to the NYMEX, and I want to throw down with the best in the world because I think I can beat them. That's what I wanted to do. Well, by the time I got there, the pits were gone. There were no more pits. So we have to take some of those old lessons and you apply them to the screen. And right now, I see key levels all over the place in the gold market. So what are key levels? Key levels are areas that are going to bring price action. They're going to bring participation. All right? Daily high, daily low. Previous day's high, previous day's low. Previous week's high, previous week's low. Previous month's high, previous month's low. Previous year's high, previous year's low. Big round numbers. Quarter handles, quarters, halves, three quarters, fulls. Those are key numbers. All right, now we're going to flip over the charts, and I'm going to show you probably the most important set of key numbers you need to know. I know I sound like Billy Mays and a salesman, but I'm telling you, if you ignore key numbers, you're riding for a fall. You're setting yourself up for some real issues. So you got to be very, very cognizant about what's happening in the market at all times, and it's very, very important that you understand key levels. Okay. Team Marine, I'll answer your question right after we go through key levels. All right, here we go. Gold. Here's your spot gold market. Here are your key levels. You got to know them. If you don't know them, you're making a big mistake. Last month's high is right up there at 435.02. Potential breakout area. There's a lot of shorts dug into this market, a lot of retail shorts. They're sort of playing rotation, believing, well, maybe if gold comes off, we were in a great position to ride it down maybe to 2,800 or 3,000. It's just a counter trend play. I don't have any problem with it. I think it's wrong. I think they're going to lose. But this area right here, we know there's going to be a bunch of retail stop losses that get run. They're going to get stopped out. They're going to get smoked. Now, where the market goes from there, I can't really tell you. I don't know. But what I will say is you've got an inside month. You've got really 4 big bullish months, and then you've got a doji. That means that the market is indecisive. Why is it indecisive? Because we're up around all-time highs. We're up around 3,500. We've got Trump trade war action. We've got Russia-Ukraine. We've got cats living with dogs. Pure hysteria. We don't know what's going on. What happens with gold? Makes a run at the all-time high, fails. Tries to pull a deep pullback, fails there too. So you're in a complete compression mode. The biggest key number on the board is going to be what? Your all-time high at 35. Now, here's how you would look at potentially trading that. There are so many ways to get involved here. You can go short, like I just said, the retail shorts right in front of that level. Look to get a pullback, a quick scalp. I got no problem with that. You could look to play a breakout and buy in above last month's high. I love that. I think you're going to get a short-term move probably of at least $10, maybe more. Probably 15, go right up to 34.50. You could take a position right here. A position long above last month's high and look to take out 3,500 and maybe ride the lightning to 4,000. The fundamentals are there to take that trade. Now, do you have enough money to do it? No. Do I? No. I don't want to do it. So these key levels are going to dictate trade. Now you say, Shane, what about last month's low? If we trade inside and then we come back and look beneath last month's low, that's an automatic sell for me. That'll knock out all the retail longs. Everybody that's retail long and maybe even some institutional longs that have been holding the last 6 months. That's a huge level. Last month's low down there at 31.20.99. If we trade beneath that, remember, that's an absolutely huge level. We covered that a lot over at How to Trade, that being a 38% retracement on the monthly. That was a beautiful long. But if we come back down and wipe that out, the market absolutely will crash. No question about it. We'll go down to 3,000. We'll be down in the 29s or the 28s. I would be willing to bet a lot of money on that, and I probably will. Now, to the top side, things are a little more dicey. We say, okay, what could happen here? When we hit last month's high, we know we're going to get a bump. There's going to be a bump there, $5, $10 bump. I don't know what. 15, maybe we go to 34.50. That could happen. If we break above last month's high in gold, does that mean that we're going to take out 3,500? No, it's not a foregone conclusion. However, there's going to be a real good chance that we are. We could go up easily, wipe that out, and then just bang 3,500 out of the box. Next thing you know, I mean, I'm not kidding you. This thing's off to the races. This is a serious big league setup for gold. A lot of people, they critique, they say things, they do things, they talk about things about people's trading, and they don't like certain approaches. I will tell you this, all the strategies that we look at, be it EMA crossovers, be it smart money, Fibonacci, whatever, they're designed for folks that don't have the big money. And I got to tell you, and I'm going to shoot you straight up here and be honest with you, the institutions that have the cash can take a trade. They could buy right above last month's high and then go on vacation for the next couple months because they know they've got to firm out. If the market reverses, they'll just get out and take the loss. But they also know that if they buy something like a 34.35 and they're thinking 4,000, I saw Goldman Sachs was talking 4,500 the other day. So, we sit here and we say, okay, Shane, I mean, it's cute and everything. No, but there's a way for us to ride this. But we got to know the game plan. First, we've got to know the key levels. We break above this key level. You could play a breakout above that. Just buy above that key level. Look to take your money right there on a quick scalp. Quick breakout scalp. No problem with that. You could do that. You can wait for this thing to break high above last month, and then buy pullbacks on short time frames, daily charts, 4-hour charts, whatever. You could do that too. You could bet, you could play the washout down here. I kind of want to play the washout to the bear, to be honest with you. That will be absolute carnage under there. The bulls will absolutely get shredded. They'll get squeezed out of the game, and then the market will probably base and then head higher. We're still very bullish for gold. This key number scenario is one of the best I've seen in a long time. One of the best I've seen in a long time. So there you have it. All right, everybody. I think I've droned on long enough about key levels, but I love key levels. They're absolutely fantastic. If you have any questions at all about what we're covering today, you can certainly just reach out and give me a call over How to Trade, or give me a private message. I'll be sure to cover it. Okay, we've got a couple of things right here, a couple of questions that I'm going to go ahead and clear up here. I want to check over in the How to Trade trading room as well. All right, let's see. Shane, T. Marina, Shane, what are your feelings about the trend rider strategy? Connor went through quite a few live sessions on it. Yeah, Connor's was the trend rider. That was sort of his baby. He took that from the Mario Singh book. We all picked a couple of strategies and presented those price action strategies to you. The trend rider, for me, I'm not an expert on it. I honestly, I don't know. That's one thing about trading. It's one of my rules. I could sit here and try to fake the trend rider and say, oh yeah, it's a great way to trade. Now, I genuinely have never traded it. I looked at it very briefly, and that was Connor's wheelhouse. That's what he did. He did the trend rider. So I said, hey, listen, what's the point of me trying to do the trend rider too? He clearly's got the inside track. He built the concept, he built the video and all the educational material. I said, let him go with it. Let him go with it. And a big shout out, I'm sure the Seaman's watching somewhere. He typically does tune in every now and then. He's over in Dubai working, so wish him all the best. Doing well. Nice to see Connor's doing well over there. One of these days I'll have to reach out, give him a call and see how things are going, see how he's enjoying the Mid-Eastern heat. But definitely good question, T. Hey, listen, I don't know. And I'm going to tell you I don't know. But I do know the orb, and our orb's getting destroyed right now. I knew that was a real funky setup. It hasn't been stopped out yet, but it's going to be. It looks like the reversal's on here for U.S. equities. As far as the rest of the day goes, should be an interesting one. And always remember the Pine Connector. This is going to be something you're going to want to check out here relatively soon. So when this thing comes online and I learn more, I will be sure to pass it along to you on these Switch Market streams. Other than that, guys, that's about it. Now, remember, if you're a client of Switch Markets and you haven't checked out how to trade, go ahead, head over there. You have free access to me. So you can send me private messages with any questions that you'd like, and I will get back to you same day, typically, unless you send it on a Friday or I'm on vacation. But I'll get back to you ASAP as soon as I can, and we'll get up and running and see if we can get you on the good foot, get you on the right foot with your trading. Just remember that the markets are incredibly dynamic, and they always change. There's no shame in asking questions. There's no shame in reaching out. But definitely love to see everybody in the room. So thanks for all your comments. Thank you, 44. Sure appreciate it. Anything you guys need, be sure to reach out. This is sort of the beginning, this infancy between the partnership between How to Trade and Switch Markets. We're just getting started. This Switch Markets Live series is going to be taking off as we move forward in time. And I really believe that we're going to have something here. The idea here is to build a community. I want a community of traders. I want a community of profitable traders that are in the markets each and every day, and they're approaching them from a position of strength. That's what this is all about. This isn't about showing up and hoping we win. This isn't about, oh, hey, I had a great day today. Oh, I wonder what tomorrow's going to bring. None of that. It's about showing up and getting the job done day in and day out, putting on the hard hat, getting the lunch bucket, and taking what you want out of these markets. I think we can build a community that can do just that. Remember, great traders aren't born, they're built. I know it's a cliche, but it's the truth. You put the time and the effort in, you can get the job done. And one last thing before I go. Remember, a great trader is the one that makes all the average trades and a few good trades. That's it. That's what a great trader is. All the average trades and a few good trades. You don't have to make a great trade every time out to be a great trader. A great trader is the one that's always there. You're always there. And that's very, very important to know. So good to see everybody. Okay, guys, I'm going to go ahead and take off. All right, last question here, and then I'm going to go. Team Arena, Shane, what is the session schedule for the How to Trade channels? Yeah, the session schedule, just cruise over to howtotrade.com in their Team Arena. I believe tomorrow I'm going at 1. Let me see. I believe I'm going at 1 p.m. Eastern. Yeah, I'm going at 1 p.m. Eastern on the How to Trade Com channel in the Forex Signals. And then Friday is going to be NFP Live. You can be sure to join us there if you'd like. NFP Live is going to start about 10 minutes before NFP, and I'll be live over on How to Trade Com and also Forex Signals. So potentially some good streaming content over there. We may actually even stream NFP Live here on Switch Markets as well. Just got to make the decision, right? All right, guys, that's a wrap. I'm going to go ahead and sign off. You have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.